Good morning, welcome to this update on Monday the 27th of June. I'm Tom Colley and I'll be talking to you about the news and the markets as usual. Okay, well, wow, Brexit. I have to admit I was out of the country and asleep at the time that the result actually came through. It came as a surprise to me and certainly a surprise to the markets. The markets seem to be indicating an expectation of a Remain vote. I think that was potentially the view of politicians, etc. But the people spoke, and Brexit it is. So inevitably, what we talk about this morning and this week and the weeks to come are possibly going to be, or probably going to be, dominated by Brexit and the effects of Brexit. Bearing in mind at this moment in time, we've just had the referendum and a result. We haven't yet had any follow through on what may or may not happen. So certainly at this moment in time and this week, uncertainty rules, and we will be trading, or won't be trading, the FX markets here at Phoenix Blue unless we get some reason to do so. We need to see what the markets have decided will be the result from their perspective. But however, unless something positive comes through, we know that we're not going to have any sort of moves until October, till we have a new Prime Minister following the resignation of David Cameron. Only after that, and this seems to have been accepted by the EU themselves, would Britain be in a position to actually activate Article 50, which is the start of the formal process, or a 2-year process for Britain to leave the EU. Okay, there's obviously a lot of political elements in this. The political side of it we're interested in, but only from a trading perspective. It's very important that your personal views are kept away from your trading. This, from my experience, is certainly the most divisive political or voting situation certainly we've seen since, say, Margaret Thatcher in the late 70s, early 80s. So people will have strong opinions one way and the other. Traders will have strong personal opinions potentially, but when we're actually thinking about trading, we need to put those to one side and look at the charts, look at the information, look at the facts, and look for our high probability trades based exclusively on that, not what we believe, we hope, or wish for. Anyway, let's start off with news events, and there's no actual events for today, but over the weekend we've had the Spanish parliamentary election. This was potentially the first opportunity for contagion of the Brexit within the Euro area. What we've actually seen is the results of that election seem to be a status quo. It's only 6 months after the most recent election. No party has a majority, and nobody has yet successfully formed a coalition, or to date formed a coalition to govern the country. The results seem to be very much the same again. So the Brexit vote doesn't appear to have had any significant difference, but you would also say that that's not a good situation for one of the big players within the EU to be in on an ongoing basis, an indecisive area. Okay, over in the Far East, where we usually start in the mornings, this is the Shanghai Composite. We really have, from in context of what happened on other equities markets, very little happening here, relatively quiet even through the Brexit vote period. Today, a bullish bar, but nothing to talk about. We're still ranging within these 2940 to 2780 that show on this chart here. So not a lot happening there. Over on the US dollar yuan exchange rate, the Chinese exchange rate, well, we've had dollar strength following the Brexit vote, and in the light of that, we've seen the Chinese government allow the yuan to weaken substantially over the last 2 sessions following the Brexit vote. We are approaching what will be key levels here. because there had been agreements that the Chinese wouldn't allow the yuan to appreciate significantly against the dollar at recent G7 meetings. However, obviously, everything is up for renegotiation. Almost every central bank has said they will do what it takes in terms of providing liquidity to the markets and preventing extreme reactions within the markets. Be that supporting the euro and the pound or generally across the world. Over in Japan on the Nikkei, their equities market, well, Friday we saw the big move down on the Brexit vote. That was reflected across many of the major indices worldwide. Interestingly, today's session overnight in respect of UK time, very indecisive. We've had the negative move, but this seems to indicate, as I said in opening the video, that here we're not trading FX. We're waiting for things to play out. It appears that the players in the Japanese equity markets are doing a similar thing. Having said that, this big move down here and a run to safe havens led to a big spike in in yen strength, in this case against the US dollar on Friday. We saw what we believe was Bank of Japan intervention, unofficial, unannounced, but this spiked down and again to $99 and again down to $100 were levels that there was clearly some sort of intervention, whether it was the Bank of Japan, but if you look, say, on a 5-minute chart, you'll see these levels were hit so precisely, it was almost as if there was a computer program selling yen at that point. Our plans in respect to this market, and this is one market we will look at this week, but our view is in terms of a long-term investment trade, we'll be looking to buy at these levels with a 3 to 6 month view of targets around 120 in the first instance, and then on above that to maybe as much as 140, say, within a 6 month time frame. But I say they're very much an investment trade, so we'll be looking to get the trade up and running, clear of our entry, stop to break even, but then looking and allowing the currency to fluctuate, so we'll not be trailing stops or anything like that. We'll just be waiting for price to hit our target unless something fundamental happens that means that view changes. So an investment trade rather than a normal trade on the time frames that we normally look at. Okay, over on the US dollar, the dollar index, big bullish spike up and move on the Brexit vote. Even at the through yesterday, through Sunday night, we saw price open at the same level as the close and another bullish bar there. So potentially ongoing dollar strength. We peaked at a level of 96.70 here. Any clear break above that, and we're going to see proper dollar strength on towards the $100 level. We potentially have the possibility of a retest prior to that move on uncertainty to this level around 93.50. Now, interestingly, the dollar may prove to be a better safe haven in the short term than gold will do in the short term. Why do I say that? Well, if you look at what's happened this year with gold, has increased in value by about 25% since the start of the year. The US dollar has devalued by about 3% since the start of the year. That would suggest to me that there is more scope in the short term for the dollar to rise. With gold, we already have a commitment of traders' extreme signal, which suggests the market needs to pull back. Our bias is still very much long, but that might inhibit its movement to the long side in the short term. So we could look to dollar strength as being an alternative safe haven. And as I said, if we get this break of about 96.70, then I think we are in a position to start trading the major and minor currency pairs based on dollar strength. I think we also see the potential of trading that strength against the commodity currencies. If we think of what's happened and the devaluation of all the equities markets, etc., we see a potential downside for commodities of countries such as Australia and Canada and New Zealand. Okay, over to the pound itself. Well, there's the massive move down. We clearly had this quite bullish movement prior to the actual night of the vote, or when the results started coming through. So that was what I mentioned earlier, which is that was the market was expecting a Remain vote and was relatively positive on that basis. When the result came through, really big spike down. I believe I read these are 15-year lows or something like that, but certainly extreme lows over what's been seen for many years. And there will inevitably, in the short term, be pressure on the pound on an ongoing basis. Over on the FTSE, the UK equities, again, there was a big movement on Friday, but this is another important factor. We said don't conflict your trading with your own biases about what you would have liked from the Brexit vote. Similarly, this is evident. Don't take what you hear and read in the press at face value. If you look at this on a daily chart, yes, Friday was a massive down, negative, bearish bar, but this is on a weekly chart. That's last week's bar. If you look at that as a trader, that was an indecisive week with very high volatility. It certainly doesn't offer any direction whatsoever. Okay, we've had an open below so far today, but we still had in the last few hours a bullish movement from that low. So another very important factor at this moment in time, the press will take figures, they'll take numbers, and they'll be totally out of context. An interesting thing to do is look at the things you read in the press, go to your charts and just see how little the press actually understand about the markets, and how they're just looking for headlines of FTSE drops 10% but pulls back to end the day with, I think, something like minus 6%. But in actual fact, if you look at the week as a whole, it's where it started. So we can't draw a conclusion from that in respect of the FTSE. Over on the euro, well, we obviously expected this from the euro. We expected a bearish move. We've seen that. Pressure on the euro could actually be greater than pressure on the pound. We'll wait and see, obviously, what transpires there. But contagion of the Brexit vote is a risk. In Britain, Mark Carney, the Bank of England governor, has a war chest, he says, of £250 billion to support the British economy and the currency through the difficult times ahead over the next, and the uncertainty through the Brexit scenario. What that means is potentially lower interest rates. We could see 0%. We might even see negative interest rates by the Bank of England. More likely, more probable, is a return to more aggressive quantitative easing to inject cash into the economy to support it in that way. Why is that so significant for the euro? Well, the euro is already effectively at its limits. It's got negative interest rates, recently massively increased its quantitative easing bond buying processes, buying higher risk bonds, and Mario Draghi, the head of the ECB, basically said, that's your lot. You know, there's not much more to give. Well, if the pressure remains on the downside for the economy, we could see euro economies pushed into recession. What we may see, however, is what the ECB have been looking for is devaluation in the euro to make economies more competitive on an exporting basis. So the two sides to that, the inability to take any more action, but potentially the results of the Brexit vote giving the stimuluses that are already in place an additional boost. This is a EUROCHF, an interesting market in the light of current events, simply because the Swissy is to a lesser extent a worldwide safe haven than it has been historically. However, it would remain a European safe haven, and the Swiss National Bank did intervene on Friday. The market they will intervene in most is undoubtedly EUROCHF, which is the most significant one to their economy, because they are in a lot of senses a eurozone orientated economy, and with a clear level here that we are looking for a close below, and then we'll be looking for a pullback to retest this level to take this short down to this lower level here, assuming that the negativity in Brexit plays out. Over on crude oil, well, we've said with commodities in general, or commodity currencies, if Brexit does mean that the economies of the world are going to slow down, things like that, that's got to be bad for the demand for commodities. Crude oil's already in an oversupply scenario, although obviously since the beginning of this year we've seen quite a lot of price growth on crude. Key levels really we're interested in here. We're looking at a break of $46 there to trade down to the circa 42.50 level, and would also be interested in this zone here if price were to get back up to that level, around the $51 level, again to take that short. More confidence, as I say, in this market coming short again following the Brexit vote. Over on the S&P, reflecting US equities, well, if we had a big down bar, bearish bar on Friday following the Brexit, as to be expected. We're below a key level here that we've been previously watching, about 2040. We're now most interested in this level at 2004. A break and close below there, and we will be looking for trades down to around the 1850 level. Unlike the FTSE, in this market, there isn't the same degree of uncertainty. If you were to look at that on a weekly basis, you'd still have a very, very bearish sentiment coming through. Gold, safe haven, I've already mentioned this when talking about the dollar. We are looking for moves above the 1340 sort of level here to take trades long. As I've already mentioned, there are commitment of traders, extreme signals, meaning this market is looking for a break. It needs a pullback. The same is true for silver. So if the result of Brexit isn't as strong as you might anticipate, we might see that pullback to say the 1260 level before we see the market going long again and breaking this longer term downward trend line. This is the weekly chart, I need to say there. So safe haven, obvious move. We've been bullish this market all year. We've made some lovely money through this really aggressive period through here. It's been a lot more difficult here. If we get a break, certainly above this level here and above this trend line, then there is real potential over the next few months for money to be made. And I think that's the net result of the Brexit decision. Is, as a trader, that might have been the choice you would have made from a purely trading perspective, because the markets had been suffering for a number of months from uncertainty, the US economy not increasing rates as everybody was anticipating at the beginning of the year. There's talk now of potential reduction in rates in the light of the Brexit vote. If not that, certainly looking as far forward as December before we see a rate hike, because very shortly we're in the lead up to the presidential elections in the States in November, so there'll be a period before that where the Fed won't act, or are unlikely to act unless something really extreme happens, because they'll want to stay out of the politics of the election. Okay, so there we are. This is Monday, the first Monday of a Brexit world. It's going to be a very interesting time. Nobody knows exactly what's going to happen. But as I said, I do think it's important to have your eye on the news to see significant events. But I think we need to be looking at the charts in the light of those events, or ahead of those events, and only be trading areas of high probability, not trading rumour, expectation. So predominantly this week we still have some commodities trades. We're short corn, we're short soybean, and we're also interested in shorts on coffee and sugar. If you're trading those markets, they are, in the context of Brexit, relatively safe. If we get a lot of dollar strength, the commodities tend to be inverse to dollar strength for the simple reason that they're valued in dollars. So if we get dollar strength, we will tend to get a downward pressure, or even a reduction in the size of moves if we're looking at long moves. So the fact we're looking for short moves at this moment in time means that they have the potential to be exaggerated over what they would. Okay, usual information about how we actually trade. This is Phoenix Blue Pure System. If you have any questions whatsoever, info@PhoenixBlue, just drop us an email, leave a message on the YouTube comments section, visit the website phoenixblue.co.uk, and if you've got any questions about anything I've specifically said today, I'm available at tom@phoenixblue.co.uk. Talk to us, let us know how you're seeing the post-Brexit world, or talk to us about if you're interested in the way that we trade, the information you've seen, and we can look to the opportunity of getting together with you and talking about how the systems that we use may be able to improve your trading. Okay, guys, so thanks a lot for listening, and we'll be speaking to you tomorrow.